Hey guys, today I want to explore a topic that's on the minds of a lot of people at the moment, which is how do you go about investing in the current climate? Today we're going to walk you through how we would invest £1,000 in stocks or ETFs. And this is a great way to get started with building some wealth.
Whether you're a seasoned investor or you're just starting out, this video will provide you with a practical step-by-step guide on investing in stocks. And it's worth mentioning that whenever investing in stocks, your capital is at risk. It can rise or fall in value. So think of investing as something you do for the long term, and where possible, stay diversified.
For those who are new to our channel, my name's Ken. I'm an accountant, former CFO, entrepreneur, and investor.
And I'm Mary, a digital marketer, a former e-business analyst, and a business owner.
Together as a couple, we run the Humble Penny and Financial Joy Academy with the goal of helping you to take control of your finances, to grow your money, and achieve financial independence and joy. Let's dive straight in.
Becoming a real investor goes beyond investing money. It's all about investing in yourself, and that's why today's video is sponsored by IG.
IG offers best-in-class education and insights to inspire confidence and help you to master the stock market through the IG Academy. We're going to link to them below so that you can feel free to head over and check them out, and we'll be talking a bit more about them later on in today's video.
In order to invest £1,000 in stocks or ETFs, here's a step-by-step guide of how we would do it. Step 1 is to set your investment goals. Now, before you start investing, it's absolutely crucial to know what your investment goals are. Ask yourself, what are you trying to achieve by investing your £1,000? Do you want to earn passive income, or save for a long-term goal, or simply grow your wealth over time? Be specific about your goals and set a time frame for achieving them. This would help you determine the best investment strategy for your money.
Right, so step 2 is to choose an investment strategy. Now, developing an investment strategy involves creating a plan that, number 1, outlines your investment goals, number 2, the types of assets you will invest in, number 3, the level of risk you are willing to take, and finally, number 4, the timeline you've got for achieving your goals. A well-defined investment strategy can help you stay on track, make informed investment decisions, and help you ultimately achieve your investment objectives. Now, you might be asking yourself, what are examples of investment strategies? There are various kinds of investment strategies. The very first investment strategies to cover is value investing. This is where you are trying to buy investments at a discount in the marketplace, and the goal is for you to then hold those investments for the long term and see them appreciate in value over time. The second investment strategy is growth investing. This is where you are buying investments that are expected to grow at a much faster rate than the market itself. This strategy focuses specifically on investing in companies that are expected to generate high earnings over time, and then those earnings then get reinvested into these companies for them to keep growing even faster. The third strategy is income investing. This is where you're investing in assets that actually generate you an ongoing income. For example, bonds or dividend-paying stocks, or even investing in real estate investment trusts. The goal here is for you to generate a regular source of income that then helps you to supplement other sources of income that you might have in your own life already. And then the final one is one we talk about here on this channel quite a lot, which is index investing. Here you are investing in a broad index such as the FTSE 100 or the S&P 500, for example, and you're doing these typically via index funds or ETFs. The goal here is for you to expose your money more broadly to the marketplace, but doing it by minimizing fees and transaction costs.
Step 3 is to choose your investment platform. This can be a stockbroker, an online investment app, or an online brokerage service. Look for a platform that is reputable, has low fees, and is user-friendly. Consider what type of investor you are and pick a platform that matches your investment style. We made a previous video on how to choose an investment platform, and we're going to link to it above and below for you to check out in your own time.
Now, this may shock you. Did you know that only 20 stocks account for about 90% of the S&P 500 gains this year? Ongoing learning about investing helps you to remain confident to master the stock market so that you know what companies to invest your money in.
The IG Academy helps you stay clued up on the stock market and take things at your own pace with short step-by-step courses, including videos, interactive exercises and quizzes so you can check your understanding.
To get started with investing in yourself, check out the IG Academy today. We'll link to it below for you to get started.
Step 4 is to research your stocks. Once you've chosen your platform, it's time to start researching on the stocks you want to invest in. This is an important step because it will help you to make informed investment decisions. Look for stocks that are undervalued, have a solid track record and are in a promising industry. You can also use financial news, analyst reports or market trends to help you with your decision making. We previously made a super duper detailed video on how to research stocks and we're going to link to it above and below for you to check out again in your own time.
Now, step 5 is to diversify your portfolio. Diversification is absolutely key for reducing risk and maximizing your returns. Instead of investing all your money into just one stock or one industry, it's very important to spread your money across different sectors and across different asset classes. In addition to that, consider investing your money in different countries as well as in different sizes of companies. Here I'm talking your large caps, your mid caps, as well as your small cap companies. By doing this, you build a well-diversified portfolio that will help you weather any stock market fluctuations.
Step 6 is to monitor your investments. Once you've made your investments, it's important to monitor them now and again. Keep an eye on the market trends, news that can impact your stocks, and any changes in the economy. This will help you identify any red flags or opportunities for growth and make any necessary adjustments to your portfolio. Remember, investing is a long-term strategy, so don't panic when the market experiences short-term fluctations.
Yep, there's ups and downs definitely happen, don't they? Step 7 is to automate your investing. Now, although you've started off with the goal of investing £1,000, our experience of wealth building is that real wealth is created when you make regular investing a part of your monthly budget. So decide on how much you'd love to start with and look to automate your investing via direct debits on a monthly basis in order to have your money working for you every single month.
In conclusion, investing in stocks can be a rewarding way to grow your wealth over time. By setting clear investment goals, choosing the right strategy and the right platform, researching your stocks, diversifying your portfolio, and monitoring your investments, you'll be well on your way to building your wealth over time.
Note though that although your goal with investing is for your wealth to grow over time, your capital is always at risk. So the value of your investments could go up as well as down. So do make sure you are definitely diversifying your investments and investing for the long term. Guys, we'd love to hear from you guys in the comments. What would you invest £1,000 in exactly? What stocks might you buy? What index funds? What ETFs might you invest £1,000 in if you were doing it right now? Jump in the comments and let us know. Thank you guys so much for watching today's video. If you've got any questions, we'll be in the comments available to respond to your questions as they arrive. Thanks again for watching. And as always, people, in all things, be thankful and seek joy.
Take care.
Bye.